Americans and the British as well, they haven't been used to currency collapse. I think the chances of that happening are pretty high. That's why I think it's actually a risk getting out of your gold and going back into the fiat dollar or the fiat pound or the fiat euro.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce Silver Valcambi Bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce Gold Valcambi Bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the very popular Innecco64 YouTube channel, the home of alternative economics. Mario, thank you so much for joining us today.
You're welcome, Elijah, and thank you for having me on your show again.
Well, it's great to have you today. Exciting day as gold decisively broke above $4,000 an ounce. It just seems to be climbing higher as we speak. Silver is just so close to $50 within about 50 cents here. Your take on what we're seeing?
Yeah, I mean, there's something wrong in this system, I think, and we haven't found out yet because every time, well, it's not like very often we see these kinds of moves. Last time it was 2011 really, when gold topped at above 1900 and silver also topped at 50. We saw the European sovereign debt crisis, and even in 08 when gold topped at 1030 in March. That was the same day that Bear Stearns had to be bailed out. And then you go back further to 1980 when silver topped around 50 and gold just below 900. The economy was in the doldrums. There was a recession. Jimmy Carter was in power. The American hostages were in Iran. Paul Volcker had to eventually let interest rates go up to 20%. Inflation, stagflation was still around. So yeah, there's something, in my opinion, that's gonna pop out of a box. Don't know if it's economic, financial, or geopolitical. I think that's what gold and silver are telling us.
I know gold sometimes anticipates inflation. That's what we saw, prior to the inflation we saw in like 2021, 2022. We saw gold run up before that, obviously. And now we're seeing that again, and you're saying it may be anticipating, more geopolitical conflict, economic concerns moving forward. But it seems like also possibly massive inflation ahead. Your take on the specific things that gold could be anticipating at the moment?
Yeah, the geopolitical is an easy one, I guess, if people have been following geopolitics, is war, right? And there's many places in the world where war could flare up, major war. First one I would say is Venezuela. The Trump administration has been acting down there near Venezuela. And I saw that Russia signed a cooperation agreement with Venezuela earlier this year. So that's one way it could start. We have the Iranian-Israeli situation. We have Ukraine, Russia, and we have Taiwan and China. As for economic, let's say, event, I would say that the fact that gold is going up and there's a lot of demand for physical gold, not just from central banks now, and also physical silver, could be pointing to some kind of credit problem in the market that we don't know about. And I think ever since 08, the banks have been put under so much regulatory oversight, excuse me, that a new kind of market is developed, like private equity, private credit, which is very opaque, and we don't know what's going on there. We've seen a couple of big companies collapse out of the blue, Tricolor and also First Brands, and that's part of this big shadow banking world. What else? Inflation. Yeah, inflation. If you look at the money supply in the U.S. M2, that's making new all-time highs, and that's what I see as inflation. But definitely you could see prices rising, especially of basic necessities. And just like the BLS has been fudging and doctoring jobs data, they revise it massively every year. They could be fudging CPI very easily, like they do here in the UK. So yeah, gold could be forecasting many things, and price rises included.
No, we were speaking just before the interview, and you've also just on one of your latest videos talked about how, some people are considering selling at the moment given the high prices. And obviously I'm getting calls here and there for people wanting to sell back and make a profit, which I think is perfectly legitimate, right? That we've seen gold and silver increase in dollar terms, double over the last couple of years. But you have kind of a word of caution is if people did that, for example, during the Germany hyperinflation, right? Or in Zimbabwe or whatnot, they would then be holding cash that then soon became worthless. So just because the nominal price is going up doesn't mean it's time to take money off the table. Did you want to kind of expand on that?
Yeah, I mean, I'll have to differentiate between people who trade, let's say, paper gold and silver, to people who stack physical gold and silver. I think stacking gold and silver is for insurance, and people have insurance for fire at their house or insurance for driving their car. It doesn't mean to say that if you never had your house burned down that you're going to get rid of your insurance, and you certainly can't get rid of your car insurance. So I think it's the same thing with gold and silver. Of course, if people want to reinvest in another asset or have an emergency, yeah, now is a great time to take some profit and do so. But I would say the place to take profit in the precious metals, if I had to, would be in the miners, precious metals, gold and silver miners, even though I think there's still a lot of room in that sector too. And as for the analogy of Weimar Germany, Zimbabwe, or Venezuela, yeah, I think we need to keep that in mind. It's never happened. Well, it happened in the U.S. During the Revolutionary War. It was called the Continental. It became worthless. They used to call it shin plaster. So Americans and the British as well, they haven't been used to currency collapse. But I think the chances of that happening are pretty high. So that's why I think it's actually a risk getting out of your gold and going back into the fiat dollar or the fiat pound or the fiat euro. If anything, I'd be trying to, even though it's getting harder because it's taking more and more fiat currency to buy an ounce of gold. Yeah, I'd be trying to continue to stack and not really worry about the price.
I think that's so key for those holding precious metals or those stacking precious metals as insurance. The geopolitical risk, right? The economic risk, the inflation risk seem to have not gone away. So it wouldn't make sense in that situation to, remove or get rid of your insurance, right?
That's right. Yeah.
with respect to silver in particular, we're coming to this very key nominal level of $50, which seems kind of like a joke in some respect, because it was $50 and almost $50 in 1980, right? And in 2011, and since then, the value of the dollar has gone down dramatically. But a lot of people are paying attention to that $50 level. Your perspective on that, and I get what could we see from here if we do break out of this level? People have been talking about it's a huge cup and handle formation. Maybe we can pull up on the screen here and post a chart from Tavi Costa showing the huge cup and handle formation. But your take on where silver could go if it does break this $50 level soon?
Yeah, today, I got up early for some reason, and then I looked at my phone and I saw that gold was testing 4,000, and it broke through 4,000 around 10 p.m. New York time, which was 3 a.m. here. I was up, and it went to 4,001 and came back down for a few minutes to 3,095, and then it just blew right through 4,000. And I think with silver is going to be the same thing. It could be today or tomorrow. We'll test 50, maybe go to 50.25, and then come back down, and then just go crazy. And there's nothing above 50 in silver, so it's difficult to say where it could go. It could be very, very easily be at 60 by next week, even though that sounds quite outlandish. I know it's been a long wait, especially since 2021, when it looked like silver was going to break through 30, and we've had to wait until recently for it to go back above 30, and now we're almost at 50. So I think it's speeding, and I mean, eventually, the way to look at silver is to look at it through the gold-silver ratio, which is probably still around 80 right now, I think. Back in 2011, that ratio got down to 30. So I think we'll go to retest that level at least. So all you need to do is see where gold is and work where silver should be in terms of the gold-silver ratio, and then you can work out a price. But yeah, it's just there's so much pent-up energy there in the silver market that's been kept in this 45-year old teacup and handle formation, because these formations are really explosive once you break through not just the handle, but also the top of the cup, which is what we're doing right now.
Right. As you mentioned, the gold silver ratio, if you adjust the silver price for the gold price, back in 1980, the gold silver ratio was about 16-1 at its low. And then in 2011, about 30-1 or somewhere around there, as you mentioned. If we were to get somewhere in that area, that would be, with gold prices staying where they are right now, that would be a silver making a 2.5 times to 5 times 5x move from here. And that's with gold just staying steady, which I think you and I both don't anticipate.
Upside potential is a lot bigger than the downside. In the downside, I guess you could argue we could go back and retest 35, 36, which is $15. But on the upside, it's hundreds of dollars.
Now, you've also been talking about silver shortages developing, and also with respect to what's happening in the SLV right now. Can you expand on that?
I've been reading, I don't follow these things too closely. I keep an eye on the price action, but I've been reading that there's been a lot of the supply, the available supply, for example, in the LBMA for delivery is becoming very limited. SLV, the ETF for silver, the bullion banks have been trying to borrow the shares so that they can get access to the physical silver, and they probably need that physical silver because they have clients saying we want the physical and they don't have it. But the lease rate was at 2.5%. Last Friday. I've seen now that it's above 10%, and there's just no shares in the SLV to be borrowed. So the bullion banks don't have any access to physical, and I think that's one of the reasons why we're seeing, silver up $1.50 today as we speak at 49.40 and fast approaching 50. That's one of the ways to solve a supply or shortage is to drive the price higher to attract people to sell it to you so you can fulfill that demand. The other way, of course, is to produce more silver, but that takes time. So, or maybe the JP Morgan and the other bullion banks can conjure up some physical silver from somewhere, but it looks like they're having a very difficult time.
Now, if we see rising prices along with, it seems like on a technical level, or just looking at what we've seen in the past for precious metal bull markets, just looking at the numbers, you can definitely see the argument for much higher prices from here. But it sounds like you're saying that there's a case to be made simply on the fundamental level of that, the amount of silver is being drained from a lot of these places.
Yeah, and I think with all the possible situations we spoke about, like economic, geopolitical, inflation, there's a lot of investors out there who are losing faith and confidence in the system, and they don't just want paper anymore. They don't want ETFs. They don't want unallocated gold or silver from their bullion banks. They want the real thing. They're concerned about credit, counterparty risk. This is like a new game in town, and also the foreign part of the equation, the BRICS countries and other non-NATO or non-G7 countries, they've been acquiring through their central banks physical gold. They don't buy futures or ETFs. So that's really changed the game, I think, because up until 3-4 years ago, paper was king, and I think paper is not king anymore.
No, we just had Clive Thompson. I know he on the channel, and he is a good friend of yours and a guest on your channel as well often. And he was talking with me yesterday about how it seems like there's, it's potentially going to be an army of money managers and investment managers moving their clients into gold. We see from Morgan Stanley, their CIO, is suggesting a 60-20-20 portfolio, or 20% in gold, which is, if you look at conventional investment portfolios in recent times, that is completely crazy. In some sense, not crazy to us, but your perspective on that, how it seems like the mainstream is just starting to look at gold and what we could, see in the future if the mainstream does move into gold.
Yeah, I agree. I spoke about that Morgan Stanley CIO change of proportion for asset allocation, and I think other Wall Street investment houses are going to probably follow suit. And it's huge, from 0 to 20. It's an infinite move if you really look at it in those terms. So, and like Clive said, I think in the U.S., less than 1% of all investment assets are in the precious metal space. Gold and silver, they've had, and the miners, they've done the best this year. I see that in someone just posted on X today that the price of gold, or gold, is now outperforming the NASDAQ for the last 5 years. People are going to start asking their fund managers and investment managers or other people, why haven't you got me into the gold sector? That question is going to be asked, especially beginning of next year, because people always look at these things at the end of the year to see which sector did the best.
Certainly. And I guess one of the last thoughts would be that, it seems like the mainstream is starting to look into gold. And also on the retail side, we're seeing it's incredibly busy. It was hard to get on the 2 interviews that I had today just because clients were calling me nonstop today. So your perspective on that, how it seems like even it was so slow on the retail side for so many months while prices continue to climb higher. But now we're seeing as it's breaking past $4,000 now. So we're seeing silver approach 50. The retail public is now really looking at it again in a new way that we haven't seen for quite a while.
Yeah, I agree with you. And I think there's still a lot of room for retail interest to grow, because they're still, especially on young people, they're still looking at Bitcoin and cryptocurrencies because Bitcoin just made an all-time high. So yeah, I think it's still early days, and of course you're going to see a lot of people who've missed the boat, or you're going to start trying to call market tops. But yeah, I would just hold on to my hat, hold on to your seat, and the old saying by Jesse Livermore, you've been right, so you just sit tight. You just have to be patient.
Well, Mario, really appreciate your time today. As always, people can find you on YouTube at Innecco64. Did you have any last thoughts for our viewers?
Yeah, for those of you who are doing well and are sitting on nice profits, and I would say don't be greedy. Be thankful. I think what gold and silver are doing is giving you peace of mind. That's the most important thing in these uncertain times, is to have the peace of mind that you don't have all your savings with a bank, that you have it in real money.
Fantastic. Well, Mario, thank you so much for your time today, and God bless.
You're welcome. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce Silver Valcambi Bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce Gold Valcambi Bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.